Are you wondering how much retirement income you and your spouse will need to retire comfortably? And what is it that you actually need? What's a good retirement income for you as a couple? Well, let's talk about that right now. Now, you're probably getting to the point, you're probably trying to plan on, okay, what is a good retirement income for me, especially for my spouse and I? What is it going to be? How much it should be? $3,000 a month, $6,000 a month, it should be $10,000 a month. What is a real comfortable retirement income for you? Well, there are things, I hate to say the two words that you always hear, but it depends, but it does. But let's talk about what that actually does look like. What is a comfortable retirement income? What's typical right now? And how can you even have a bigger retirement income as you come along into retirement? All right, so right now, if you look at the statistics today, a couple, when they're retiring, on average, about $50,000 a year. $50,000. It's just under $4,200 a month. Not a lot. That includes Social Security, which is about $30,000 of that. So about $29,000 Social Security, the other $21,000 is coming from investments. It's probably not what you would consider being a comfortable retirement income. Now, for some of you, it might be enough, depending on where you live. If you live in a place where inflation is not as big, like California, for example, is definitely not the cheapest state to live in. That would be different, just like living in maybe Connecticut or New York or places like that. But you might be living in Mississippi. You could be living in a place like Wyoming where the dollar stretches way better. So that's what I mean. It kind of does depend is what is a comfortable retirement income, but it also depends on what kind of life do you want to live. So for example, I had one client where she was 55 years old. She was going to start ramping up her business some more, but then decided she wanted to just not fade off into the sunset, but she wanted to just kind of chill. She didn't really want to keep building her business anymore. And she's single. She's not a couple, obviously, but she's single. For her, $3,000 a month was more than enough. And that's what we got her for $3,000 a month. She moved to Bali, lived on $1,200 a month. It was great. So she lived more the expat life. Now that could be much different because I've had other couples where they said, no, I want at least $10,000 a month, right? $20,000. I've even had $30,000 a month. For example, dentists usually want at least $20,000 to $30,000 a month, not because they can't live on less, but because they don't want to live on less. They're used to a better lifestyle, a better way of living. And that might be the same for you too. And it really just depends on what is it you want to live on. Now, I remember back in the day, so I was a financial advisor. I got hired as a financial advisor 23 years ago. I did that for 4 years. And during those 4 years, we were talking about our own retirement goals. And my retirement goal back in the early 2000s, you guys remember the Y2K era, just after 9/11 and everything, that's when I became a financial advisor. And during that time, I was thinking the best time, best way to retire, I wanted to retire in my 40s even, and I wanted to retire, be able to still, while I'm taking care of my family, I thought at that time that if I could live on $5,000 a month, $60,000 a year, that was living the life. So $5,000 a month, if you guys remember back then, $5,000 a month was actually a pretty good amount of money. It's almost like living on over $10,000 a month today. Well, $5,000 a month is not the same as it used to be, is it? And as a result, now even living on $5,000 a month, which is still more than the average, isn't a great lifestyle. It's okay, depending on, again, where you live, your circumstances, do you have children living at home or not? If you're taking care of people, it just all depends. If you want to travel more or not, if you have higher medical expenses or not. All of these things are factors. All of these are variables. They all come back to the same thing. I'm so glad that I was able to retire quicker than in my 40s because I was able to then kind of beat that inflation before it made it worse. So $5,000 a month is definitely not great. For me now, I want at least $20,000 a month for my family and I to live on, minimum. And that's even just living a good, comfortable life. But for you, it might be different. It might be less, it might be more. Now let me give some examples of some of my clients that have done this. I had one guy that literally, he didn't want to live on $30,000 a year because his $1 million, he didn't want that to be the case. Now understand, if you have mutual funds right now, here's the problem, is that even if you have a higher lifestyle that you want to live on, it may not let you do that. Because if you want to retire in your 60s specifically, not even talking about early retirement, that's less, but in your 60s, you shouldn't pull off more than 3% if you're investing in mutual funds. Why? Because we don't want inflation to kill it, plus you're living longer. Just so you know, if you're a couple and you both live to the age of 65, there's a pretty high chance that one of you will make it to 92. That means you got another 27 years to fund. And Social Security, as we well know, although they try to adjust for inflation, let's be honest, we all know the government doesn't really adjust for true inflation. We know that you're kind of losing every single year. It's becoming less and less impactful in your life. Not to mention Social Security's been going broke. We don't even know if we'll have the same benefits tomorrow anyways. That puts more of the responsibility on your shoulders, which isn't cool. But that's just what it is. So as a result, we got to make sure we have more income coming in. But if you have to live on 3%, just like this guy did, him and his wife, they had $1 million in their retirement accounts, but they're supposed to live on $30,000 a year based on what their financial advisor recommended. That's not much. Now, obviously they need more, so they're going to be pulling out more, but then the worry is always going to be, will I run out of money too soon? This is what happened with my dad as well. For him at the time, back in the mid 2000s, if he could live on $60,000 a year, $50,000 a year, that was more than enough, especially with a paid off house, and being totally debt free, as well as just, having the lifestyle he lived, he thought that would be more than comfortable. $50,000 a year would be great. But what happened, of course, is that as I started looking at his money, I said, well, based on the amount of money you have, that might only last you 6 years. And then what? What are you going to do? Social Security will kick in finally at 62. He was 61 at the time. So 62, Social Security can kick in, but it wasn't going to be a lot of money either coming from that. That would just slow the leak to the point where it might give him an extra year or two. And he got Medicaid and Medicare and all this stuff to help with the health costs. But he was literally stretching out the dollars as much as he could, and he lived way beyond the time he thought he'd be able to live. Now he's into his 80s at this point. He never thought he would make it into his 70s, really. So that's the reality we have to deal with. And that's why so few people feel like they can pull out more than about 3% a year out of their retirement accounts. That's why when I told you only about 20,000 is coming out on average versus the rest of it's Social Security, now you know why. Because people are trying to let their money stretch and grow, especially when they're in that retirement phase and inflation keeps beating them up. So what's the answer? Well, like I mentioned, that particular client had $1 million. For him, he was always supposed to live on $30,000 a year, but instead we got to invest in other things. See, if you want to live a comfortable retirement, you can't just focus on only this stretching out your money, living on less than the interest so that you don't lose to inflation. The real thing you got to do is, how do I get my money to pay me income? Real income. Yes, there are annuities out there. Annuities can help, but you can do better than that, because a lot of times even if you have those annuities, you might net maybe 5% a year, which you could almost do in a CD right now too. Granted, they got some extra little perks that you might not get in a CD, but you're still paying taxes on it. It's not gonna make you rich, right? It might help a little bit, but it's not gonna be everything. However, just like this guy here, he realized he could get into investments backed by real assets like real estate. And those investments would pay him income of at least usually 10% or more per year. So as a result, his $1 million was now paying him over $100,000 a year with the same money, but just getting more than triple the buying power or the spending power, because it's creating real actual income. And it's creating income now, not just theoretical income down the road. There's other situations too where I've had a couple where, they're trying to figure out what will it take. This one woman, she's like, if we can just get $6,000 a month, that would be enough. Well, she started with $650,000. $650,000 was not quite there, but after a couple of years of reinvesting the money, we got her to that point. And now she's financially independent. I got another couple, the same kind of thing. Now they were looking for a little bit more. They wanted $20,000 a month. Actually, they wanted $22,000 a month to become financially independent. Now, here's what we did. This helped, because it's not just about creating the income. Sometimes about how do you control the cash flow in your day-to-day living. Well, in their situation, I realized, I said, well, you've got your mortgage and stuff, but if you actually cash out, refinance your mortgage to pay off some of these other loans here, by the way, they had $5 million in stocks. And yes, they had a whole bunch of other loans too. Crazy, I know. I said, well, what if we do this? Cash out, refinance, pay off these other loans. You'll free up $3,800 a month from the money you save on the mortgage, because the mortgage payment would be even lower than it is currently, and you're paying off debt too. It's essentially like you're paying nothing, nothing out of pocket to be able to free up really $45,000 a year. And then on top of that, because they were business owners, we said, well, listen, we can actually go and have you talk to a CPA, see if we can free up some more money on tax savings. They found out they could save between $30,000 and $40,000 a year. So they're already over $75,000 or so a year that they're saving even before we invested. What did that do? That brought it down. So that went from $22,000, now they only need about $16,000 a month to live on. Well, the cool thing is, for them to get $16,000 a month, all they need to do is really have about $1.6 million invested of their $5 million. So they could still keep some of their stocks, cash out $2 million, make $200 grand a year, and boom, they're there all in the same year. I had another lady who also wanted to retire as well, that she was looking to do it, but she only needed a couple thousand a month. I mean, she wasn't married, so she was single. That's another story. But again, she had more than enough money to be able to create the income streams now. And so here's what I suggest for you. If you want to figure out what kind of passive income could you create today? That doesn't mean that's not what it's going to be tomorrow or down the road, because you can create more down the road if you reinvest it. But what can you do today? Go to moneyripples.com. There's a passive income calculator you can try for free. Fill it out accurately. Make sure when you're putting in old 401ks, don't put in your current company 401k, but old 401ks and IRAs that you have. You can put that in the section there. They ask about savings, home equity, even if you have rental properties, what's the rent you're getting compared to the equity that's in the property. I'll tell you this, I had another client, same thing. Him and his wife really didn't need a lot to live on. They were very, very frugal. And this came up with their situation when they were trying to do the calculator. And when we were calculating it, I realized, I said, well, I see your strategy is to go debt-free in the next 6 years. And if you do that, yeah, you'll free up, when you factor in, it's just principal and interest, not the taxes and insurance on the properties, you'll free up $4,200 a month. That's about $50,000 a year. However, we could do this. We could actually sell off your rental property, because what are you cash flowing right now? $200 a month. $200 a month, but you have $700,000 of equity. That's a 0.3% return on your equity. That's worse than any kind of savings account or CD, really, for the most part. I said, what if we sell that property, go tax-free, move it over, that equity over tax-free to other properties that will actually pay you bigger cash flow? Took him 2 years to convince him to do it. He finally did it. He emailed me recently. He's like, Chris, I now understand why. I've been investing in that money. I invested, bought 6 different properties out in Louisiana. He lived in California. Bought all these properties in Louisiana, somebody else can manage for him. He's then since reinvested the money to then buy more properties, and now he's had an income of over $100,000 a year with just the $700,000 that came from his property. It doesn't include anything in his savings, his IRAs, 401ks, nothing. One property, the equity of that property that happened to appreciate, he was able to sell off and generate $100,000 a year. Is it guaranteed? No, of course not, but can definitely get you a huge leg up depending on where that money is or where it can be used to generate more income. All right, so if you're looking for solutions and what are the ways to do it, you want to go deeper down this rabbit hole, go ahead and subscribe to this Money Ripples channel. And like I said, go to moneyripples.com, try that passive income calculator to see what you could actually be creating in the next 12 months in your situation.